29k on a 100k account. That's a pretty good trading day. Yesterday we discussed, or possibly not yesterday, possibly another day if I've been slow at getting this uploaded. Yesterday, probably, we discussed 3 types of liquidity that I use in my trading. Ooh. External liquidity, range liquidity, and internal liquidity. That's good. I'm going to talk you through a couple of examples today, how we would trade them, what we'd be looking for in these trades, and hopefully this will make the examples a little bit clearer. If you haven't watched the last video, make sure you go back and watch it, because otherwise this will probably not make very much sense.
So I am confusion.
This is a 2-part video, split over a couple of days.
Why you always lying?
Because I want to keep them short, sharp, and sweet. Not short, sharp. That's something completely different. So let's just zoom this trade back. Let's have a quick look. Let's imagine our chart right now is here. Okay, we are clearly in a bullish market structure. Okay, we can clearly see this. We've got multiple breaks of structures bullish. We've got little pullbacks, but we are bullish. This chart is a bullish chart. That's it. We've now got premium down to discount. That is our range. This is our higher time frame range. That is the range, that is the move that broke that to the left. So this is now our new range, and this is what we trade from. This is where we're going to be looking at opportunities to trade from. So we mark on, firstly, our external liquidity points. That is external. We're going to make it a lovely little color of orange. And then down here, we've got another external liquidity point. Let's pop that on. Now, in order to find our range liquidity, okay, in a bullish market structure, range liquidity is the last low before the main low, or the last low before the external low. Not sure what, I got confused then.
Confusion.
So we're going to pop that on. That's our range liquidity. Okay, that's now marked out. And then what we've got here is we've got multiple different internal liquidity points. So I'll put that one as a purple. That is INT, internal. I'm going to put another one here. Those are our internal liquidity points. So these are the key areas that we are looking for trades from. If we get an internal liquidity sweep, we are going to be selling, but we're only going to be selling down to the range. I'd pretty much take my full profit off at the range. If we get a external liquidity sweep on the buy side, we can look for sells as well. And equally, if we just continually push down, we might be looking for range liquidity buys or external liquidities at the lower level buys as well. Okay, so we're coming into the morning session now. I think, let's have a quick look. So where are we? I think this is overnight. Yeah, so overnight. So let me get into my session. And my session is the morning session of London. Let's just play it out a little bit. Let's see if we get that range. So you see, firstly, how that level is holding quite well. You can see that has some gravitas. What that means is that loads of stops are going to be placed above there. Okay, and it's just worth bearing that in mind. Let's see if we can get a sweep of it. Okay, so we've had our sweep. We now, once we've got our sweep, we drop down to our lower time frames, okay? Now you can do one of two things. You can just purely trade this off the back of that, okay? That is a riskier entry, so you want a slightly wider stop, but, you know, once we've got a sweep of these internal levels, we know from the medium time frame that we are pushing bearish, and we know that the likelihood is that price is going to come down to these lower prices in order to, you know, push bullish again. So this is quite a safe trade. It's high enough up in the range. It's in the premium part of the range. You can see that little wick has come into our premium part of the range, so we're happy to take a sell from here, but we are selling down from premium, so sells can be taken anywhere above this equilibrium line. I'm pretty happy with that, to be fair. Okay, let's have a quick look, see if we get our manipulation set up. So what I'm looking for now is I'm looking for some sort of manipulation. So let's see if we get one. Yeah, so I'm pretty happy. I want an engulfing now. Okay, cool. So I would take that trade like this. Okay, we'll stop above that high to the left. That's a relatively safe. This is now our manipulation setup. Okay, we've got to push down, push up, push down, push up, push down, manipulation. Okay, we know that we're ultimately bearish. We're going to be looking for bearish setups. We've got a manipulation setup here. Let's mark that on as an MSU. Okay, we've got our engulfing pattern, stop above the high to the left. That should now run quite nicely down to that lower level. Let's have a quick look. Okay, so we got taken out. Okay, this will happen from time to time, and this is why that first position that we're looking at, we go for a slightly wider stop. So we get a nice little push down again. So again, we've got another raid. So we've got another raid here. Now, if you're really confident on your positions, we can pop that on like that. That's our raid. Okay, so we've got a liquidity raid here. So that now for us is, right, let's have a look, see if we can get another MSU setup out of this. So I'm looking for manipulation. Technically that is a manipulation. It's not the cleanest of ones. So you could do a stop like this with, you know, a safe stop above the high, something like that. 8 pip stops, something like that. We get into it a little bit later ultimately. Let's hold that down to the low and see if we get what we want. Let's jump up the time frame. Okay, we've had 2 sweeps now. Usually when we have that fake breaker structure, we can then have a pretty safe trade. So we've cleared a major liquidity point. We've had an initial rejection of it, and then we have a push up, which creates, what this creates is makes a fake breaker structure. Ultimately, what happens here is normally after that move, it will just normally, you know, flow down quite nicely. You've got another setup there. That's our New York trap. So really clear setup here. So you'd have taken this like that, okay, knowing that that's a trap in the New York zone. We've then pretended, that's what price does, it pretends to go bullish and it tricks us into thinking that we've got some bullish price structure, and then we go bearish. I would have been quite happy to take a trade like that, taken out with a high above that stop. I'll be more than happy with that. Targeting first lows there and then holding down. That's a pretty simple trade. That appears almost every single day. Let's see if we hold the target. Okay, and then we've got our target ultimately. Okay, so for us now, we're in a really strong position. We've taken out our target. We've got 6 off that one. We had a -1, so that's 5. Then another 6, so that puts us on 11. And then another 6 on top of that. 11 plus 6 is 17. So we've done 17R, 17% just from internal liquidity. On the basis that this isn't even the main liquidity, this is a really good place for us to start from. Okay, now, what's happened here? We have taken out our range liquidity. Now, we've gone a little bit further back than we want to do, okay? As soon as price takes that liquidity, we want to be looking at what price and how price reacts, okay? So we drop down to our 1 minute time frame, okay? We're looking for fake breaks of structure. We're looking for manipulation setups. We're looking for whatever it takes basically to get into this buy. So this is the wrong time of day for me. This is like 17, 18 o'clock. No, that's not real time. It's 5, 6 o'clock, okay? For me, I'm not too fussed about trading at this time, but this is a manipulation setup we got here. I wouldn't have taken this trade. I'll be perfectly honest with you. I would not have taken this trade, only because, I mean, it's valid, but I haven't got my ISC. I want my really clean candles. I want my, you know, really clean move down, push back up, then a manipulation setup. That's what I'm looking for. That's my setup with, you know, with that there, okay, that's my perfect setup. I haven't really got it. It's just pretty ugly. It is a trade that I could take, but it's a trade that I'd probably take if it was much earlier in the day, like London Open or New York Open. We do, however, get an engulfing here, okay? So let's say we get into the trade. Why does this never click? Okay, and then we set that like that. First target would be off there. Let's see what happens. Okay, so it's moving quite nicely, and then, oh shit, what's happened there? Okay, I'll tell you even why I wouldn't have taken this there. I'll tell you really, really clearly. This is 7 o'clock. Yeah, 7 o'clock on a Wednesday. This is FOMC news. This is a really dangerous time to trade. I mean, look, you can see news ultimately will just push the price typically in the direction it wanted to go, but in a more volatile way. But that is definitely not a trade that I would have taken. It's outside of my trading hours, and it's during a news event. You can see, however, if you were risky, it's a lovely trade. It's a 12% trade or 12R trade, and that is pretty good for an evening trade. So, you know, we've got 17 off here, we've got 12 off here. Just in this trading session, we've ultimately taken out of the marketplace. Quick maths, 29%. 29K on a 100K account. That's a pretty good trading day. Just using these concepts. So, internal liquidity, that is our weaker liquidity, that is going to be taking us down to range liquidity. You can see that once we tagged that range liquidity, we had a big buy. I'm going to talk you through how to trade external liquidity points in the next video, so make sure you stay tuned and I'll catch you in the next one. Cheers.